After gold saw 14% climb in 2022, the bullion extended over 2% gains so far this year as moderation in US economic data strengthened hopes of a slowdown in rate hikes by the US Federal Reserve. On MCX, spot gold hovered around 56,100 rupees per 10 gram, inching towards August 2020 highs of 56,200. In the international markets, meanwhile, spot gold scaled to 8-month high of $1,874, supported by losses in the dollar index. Experts believe that investors flocked to the safe haven asset after the US dollar index declined 9% to 103.2 from October 2022 highs of 113.1. Moreover, analysts peg that the Chinese reopening of the economy would push the demand for the yellow metal and trigger up to 16% rally in 2023.
Gold and the US dollar have had an inverse correlation with each other. So whenever the dollar moves lower, gold generally tends to move higher. And this is what we have been seeing in the last couple of months. So the US dollar index topped out at around 114, 115 levels. And from that point onwards, gold has been seeing a steady up move. So we believe that the US dollar is likely to shift lower. Probably it could head even below the 100 mark in the next couple of months, and this would be a major positive news for the gold. And from a domestic angle, if we see, gold is already trading around its all-time highs. So significant up move could be seen from these levels if we break out of these previous highs of around 57,000. So there's a strong possibility that gold could see a sharp up move in rupee terms. On gold, we are expecting a target of around 65,000 and higher levels.
Analysts also believe that fund managers would continue to prefer gold over other asset classes as hedge against their portfolio until global uncertainties fade out.
Gold is likely to rise to record high level in 2023. It is up nearly 3.5% this year as it is being propelled higher on multitude of factors. There is an increased risk of global recession. As per IMF, global growth is likely to be 2.7% in 2023, the weakest growth since 2001 except for the global financial crisis and the COVID-19 pandemic periods. Latest US ISM manufacturing and ISM non-manufacturing data have dipped into contraction zone. Thus, odds of a US recession or stagflation have increased dramatically. In the US, full-time employment is down by 444,000 since May. The US Federal Reserve may turn less hawkish going forward. In this scenario, the US dollar is likely to struggle and yields may soften further. Other major supporting factors include expectations of China's pent-up demand as it reopens its economy, continued support from central bank buying, fund managers buying gold as insurance to their portfolios, fiasco in cryptocurrencies space, and geopolitical concerns due to Russia-Ukraine war and China-Taiwan tiff. Biggest risk to bullish outlook will come on a truce between Russia and Ukraine. The metal is expected to make new highs this year. Its all-time high is $2075 in the spot market. In the Indian rupee terms, it may rise to Rs 63,000 to Rs 65,000 this year.
Analysts at World Gold Council believe that the yellow metal would face a tough environment in 2023 if business confidence is restored and spending rebounds. As regards today, rupee movement, global cues, and FII flows will steer market sentiments. Globally, investors will watch out crude inventory data later today.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.